we have Joe Carlasare. I met Joe on Twitter and X, I guess, and really been impressed, Joe, with your understanding of the market. You love Bitcoin, as I understand. I'm not putting words in your mouth. You've been studying this a long time. You have a legal background. That's what I really find fascinating, is the strategy around how this rolls out without getting political, and, you know, the whole Bitcoin maxi thing, which I think is just a waste of energy and time, because the market's going to do what the market's going to do. And I love that about you. Also, you're one of the few lawyers that, like, hey, let the market work and it'll solve all problems. So, Joe, great to have you on the show, man.
Great to be on, and great to talk with you. I got to just say right at the outset that thank you for what you're doing with your rooms, because, as you know, and we've talked about this privately and publicly, you know, it's frustrating because you got this once in a generation asset like Bitcoin. And one of the things I try to get out there and message to people is that while it may have started in its roots in this cyberpunk, you know, very crypto anarchist type movement, it's moving mainstream and it's moving for everybody. I mean, I think at the end of the day, everybody's going to have exposure to Bitcoin in one capacity or another. And people like yourself, I think, are presenting it in a way that's digestible more for mainstream. And I try to do the same because I work with clients of all different stripes, you know, conservative, liberal, moderates, and I have to, you know, communicate Bitcoin in a way that I think is approachable. So anyway, it's a pleasure to be here, and I'm glad to talk with you about Bitcoin.
Yeah, thank you, Joe. Appreciate the compliments, and I'm really trying to just bridge the gap between the new world and the old world. What got you in this space? Can you kind of tell? People talk about going down the rabbit hole. I think you're actually pulled into the rabbit hole.
Yes.
Not you don't naturally go into this bizarre hole. But how did you get here?
Well, I've been investing, you know, since basically grade school. I had a custodial account that my dad and I worked on. We were trading stocks, and he explained to me, you know, aspects of the bond market and all that. And I was always kind of interested in investing generally. He also dabbled in real estate and that sort of thing. But as I got older, you know, and you move into professions, in my case, the law, you know, I always try to like sort of spot what is the next sort of generation moving towards, what's the next interesting thing that's developing. And when I first came out of law school, it was basically the very early days of Bitcoin. Graduated in 2012. You know, you basically, you know, had a whole industry of people saying our financial payment system doesn't work. Our monetary policy is messed up. Our fiscal policy is messed up. We want to have a native form of money for the internet. And I approach it like most do, with skepticism, saying it's probably a hoax or a Ponzi scheme or so forth. But as I started to represent clients and folks that were really interested in it, I started to realize that you had some of the smartest guys in the room that were behind this, and they really came from a position of having ideals and having a position of integrity, and trying to create something different, and really being faithful to the idea of Bitcoin, which has evolved over time, right? We can all agree that I think you described it one time in a room as sort of a science project in the early days, moving into more of a mainstream asset. And as I tried to pick it apart, which is my job as a lawyer, right? I have to constantly assess risk and figure out for my clients, not just what is immediately at their doorstep, but what could come, you know, 2-3 months down the line and start to haunt them from a risk perspective. I did that to Bitcoin. I sort of tried my best to pick it apart, attack it, say why this doesn't work, say why the regulatory or the legal state's going to tear it down. And much to my surprise, Gary, I couldn't figure it out any way to really break the thing, right? And when I find something that I can't break, either through you know, technical or legal or some sort of weakness, that gives me really hope for it. I think, you know, if you can't kill it, it's going to survive and endure, and it's probably going to expand in terms of its adoption. So as I started to dabble more in it, I started to invest in it a little bit, 2015, 2016, very small amounts, you know, just to play with it. And then more and more it kind of snowballed, and then I got hooked. So that's pretty much it. You're right. Fell down the rabbit hole.
Yeah, I really think there's going to be a study done on type of personality, IQ, what brought you here. Because, like, I can stick my brother's head into this room, into this rabbit hole. He's not going anywhere. He's just not going anywhere right now. Don't know why, but it's going to be an interesting study. I I don't believe people get this when they deserve it. That's such a shaming, like, well, if you were smart enough, you would have gotten it all.
No, no.
Look, you know what? Life happens. So
It,
I
it,
don't,
it takes a little bit, Gary, of a contrarian. I think you got to be a little bit of someone who goes against the grain. I
right.
sense a little bit of that in you from our interactions. You're definitely somebody who's willing to sort of challenge the mainstream message or the mainstream narrative. I think that's a little bit of it, which is not a bad thing. The people that are willing to ask the tough questions are the people that end up pushing society forward, I think.
Yeah, I agree. Look, for the audience, I only have half an hour with Joe because I messed up this morning. Maybe we'll do a part two. I want to talk about a couple of things that I think you are especially qualified to talk about. One is I'm going to move to the ETF really, really fast, but the internet money that you talked about and all the really smart people that you were running into in the early years when you started coming into this, I'd like to just make the point. Do you find it really interesting that this technology has been around in two versions prior to it? The internet, Google, Facebook, all of the things that happened in the late 1990s to bring what we're doing right here together, like on the web. Do you find it amazing? I find it stunningly interesting that all the people that were smart enough to create the World Wide Web never, ever considered it would be a money transporter. It would be a way for people to not do just communication, but to actually use currency as a form of communication.
Yeah, it is interesting. You can even go way back, right? Go back to even the like basically the invention of the printing press, right? The folks had to go through this progression, right? Before you could eventually get to the internet, you had to be able to record en masse and reproduce through technology, right? The printed word, and then you had very basic, dial type computers. Then you had, technological advancements from the hardware components that let you make the computer smaller and make circuits smaller, and eventually move to the internet. And it's all a progression, right? And the guy who puts in his little link in the chain, who makes his or her little innovation, right? You got to remember they're in a long sequence of people pushing society and humanity forward. I mean, Satoshi Nakamoto, he, she, or they didn't really create any new individual type of technology, right? They took existing things that were out there and they meshed them together, and put them together in what we know as Bitcoin, right? So if you go read the white paper, it's citing other previously, completed works, and it's putting it all together, putting all the pieces together in this innovation. I just think that's how innovation works. And I also think, one of the things that's fascinating for me is that what you tend to see in the long arc of human history is you see basically governments become more centralized and more, sort of willing to encroach upon people's liberties. And the common thread that sort of pushes back against that, and this may be showing some of my political bias, but the common thread is that you have technology, right? Whether it's muskets, whether it's the printing press, whether it's Bitcoin, whether it's the internet, being able to disseminate information, all of the technologies that are really vital for human history, I think, come about in many respects because I think governments are overreaching perhaps with what they're trying to do in terms of centralization.
Yeah, totally agree. I just find it really, I think where I'm trying to head is that when people talk about why Bitcoin and why now, the point is that Google and Apple and Facebook and everything that came before this moment really underestimated the opportunity.
Yeah.
See,
Well,
I think we always underestimate these century events. We think they're just little window dressing, but in fact, they're undermining how we do everything. Not undermining in a negative way, but resetting the table for how we're going to do it in the future.
I think that's right. But the other thing I would add to that is one of the reasons why those guys miss something like Bitcoin is because for Bitcoin to really work, as you pointed out in the early days as a science project, you need a little bit of somebody getting it off the ground and what I refer to as sort of an immaculate conception. I mean, I know Satoshi kind of he mined a lot of Bitcoin that apparently he or she didn't spend, But the point is, like, it was a project, an open source project. And I think in the early days, they were just sort of, we need to get this out there and we need to start getting people behind it. They were, as you know, Gary, I think they were giving people away Bitcoin. There were fountains on the internet in the real early days where you could go and get 5 or 6 Bitcoin for free and people just wouldn't even take it. So the point is I'm trying to make is that I think, like, a lot of the companies you cited there, they thought, they didn't really anticipate, how do you make money off, internet currency? How do you really do that in a way where you can monetize it? And then we had the total swing in the opposite with the altcoins, right? The altcoins are all about, how do I give myself a huge pot of free money? And that's why I don't really believe in a lot of the altcoins, because I think they're really self-serving in how they come to market.
Yeah, right. Well, let's talk about an area that I know the audience is going to be really interested in, the ETF. And I'm going to throw some things at you that may be more challenging because no one's been able to answer this. Let's just talk a little bit about what the ETF is, what it facilitates, and then a little bit about, if you could, the seeding. Because I don't think anyone really understands how the seeding works and if that were to drive any type of supply-demand crunch in the foreseeable future.
Yeah, absolutely. So at a very elementary level, an ETF is an exchange-traded fund, which basically means it's sort of a basket of something, an underlying. Most of the people are familiar with ETFs in the form of stocks, right? Where they take a basket of securities and they package them. So you just need to buy the SPY ETF and you get all the companies in the S&P 500. So with respect to Bitcoin, it's similar, right? You're buying a fund, and that fund has within its sort of mandate, within its trust structure, a bunch of spot Bitcoin that it's purchased. So it's holding it on your behalf. And the idea behind it is that when Bitcoin's price appreciates, the shares of that fund will appreciate on a one-for-one basis alongside it. Now, many people are familiar with things like the GBTC, which is a closed-end trust, okay? What the GBTC is effectively doing is it's similar to an ETF, but the big distinction is that when the GBTC buys Bitcoin, when that trust buys Bitcoin, it enters the trust and it never leaves, right? It's the Hotel California. It sits there. And the only way they ever have Bitcoin leave the trust is if they're selling it for fees. An ETF structure is very different, Gary. What it's doing is, on a daily basis, it's actually selling or buying Bitcoin to keep the net asset value, the NAV, in line with the shares. So the reason why a lot of people are excited about it is that when you buy these other structures, when you buy things like MicroStrategy, which has a bunch of Bitcoin, or when you buy GBTC, the price of those securities isn't one for one with Bitcoin. It's not going to match it, okay? The big distinction is that with the ETF, if you see Bitcoin go up 10%, theoretically, what should happen is the ETF, which is holding a lot of Bitcoin, that should also go up close to 10%. Does that make sense?
Yeah, for sure. It's basically a paper way to invest in Bitcoin without holding Bitcoin in your own wallet, and without having to do anything that's more unique than someone buying, say, 1,000 shares of IBM through Fidelity. Correct?
Right. And that's all correct. And the one big thing that I think a lot of folks are missing, because they always, a lot of the Bitcoiners talk about, well, you should hold, native Bitcoin, you should hold your own Bitcoin, hold it in cold storage. I get all that, and I'm not going to fight with people about all that. That's not really why I'm here. That's probably preferred, but you got to remember, as you know, the big issue with a lot of people is that they've stuck a ton of money into retirement vehicles, and those retirement vehicles don't have access to buy spot Bitcoin. They can't do it in an easy way. This type of situation puts in a vehicle that's far better than the GBTC and other alternatives that they can use right in their retirement accounts, have it be tax advantaged, and they can own effectively spot Bitcoin that's going to better correspond to the price. If you have a significant amount of money in your IRA and you want exposure to Bitcoin, if you buy these other vehicles, you have a lot of other risks that won't be present with the ETF.
Got it. So, and I think a lot of people really, I think the great interest over the next 6 to 9 months is, does the ETF, which we can talk about approval here or not approval, some kind of game theory on before the halving or after the halving, but do you think this will drive a supply demand issue that would put pressure either up or down on price, because you're going to see, as you said, you're going to see BlackRock or Grayscale. I cannot imagine Grayscale not getting approved.
No, it will. Yeah, it will.
Like it's, you cannot have those guys outside the ETF with 600,000 coins. But do you think this drives price up or down? And if it does, how does that show up? Is it related to the seeding? Is it related to filling this bucket of the ETF up with coins that it has to always be balanced?
Yeah, I mean, that's exactly it. And you brought up flows. So let's just talk about this. So if you have if you're creating an ETF, and keep in mind there's over 10 different applicants at this point, Gary, that have submitted applications. What they're going to do is they're going to issue shares in proportion to the amount of Bitcoin they hold. Okay. Now, if those shares, if there's a huge market demand for the shares, what will occur is that the shares will be slightly trading at a premium to the Bitcoin that they hold, meaning that the shares, you're familiar with the discount where the shares of the GBTC don't reflect actually the underlying value of the Bitcoin that the Grayscale Trust holds. Well, the opposite could happen with an ETF. And what the ETF has to do on a daily basis, essentially, is they have to go into the marketplace and acquire the Bitcoin to bring their shares down from the premium to NAV. So you have a better corresponding match of the value. That's getting a little bit into the weeds, but the key thing there is that on a regular, steady, orderly basis, they have to either be a buyer or seller of Bitcoin based on what the Bitcoin price does. If the spot Bitcoin price goes up, then guess what? They are going to have to, at that point, their share value is going to increase. But if there's demand, they're going to have to be buying Bitcoin to keep the share in alignment with NAV. Same thing at the opposite. If the price is going down in Bitcoin, it's likely they'll be going into the market and selling Bitcoin they hold. But the bigger question is, what is demand going to look like? And I'll tell you, one of the things that has me really bullish about the ETF is that some of the analysis that's come out from the investment shops that are looking at this, they have been very pessimistic about the flows. Bloomberg had shared with me that they believe in the first year that you're going to get 10 billion in flows, which to me, that seems overly pessimistic. And one of the things I think in the investment world is that if you have a surprise to the upside, if you see bigger flows than are expected by the marketplace, that tends to cause the price to rip. So for my part, I think that, when they're going out and they're buying these things and you have a limited supply out there, you've got only a few million coins at any given time, that obviously that's static. That's not static. It can change. People can move coins to exchanges, move coins from wallets. But the bigger thing is that you can see a lot of interest develop because of a Bitcoin bull cycle, and that's a cascading effect. I mean, it will result in upward pressure and upward buying pressure from the ETFs constantly, so long as there's demand. There has to be demand. You can't fake it. There has to be people willing to put money in this asset.
Yeah, there's 50 million people holding Bitcoin around the world in wallets, right? So,
Right.
My older sister, she's not in this space. I mean, she comes in this space. She's going to be sold this product. She's not even going to probably pick her finger up. They're going to allocate it to her. I've never seen a market like this where you're going to see the BlackRock's, their activity. And I think that's going to be a challenge. Just go back just a second, though. You talked about whether the price was going up or down. Just to dismiss any kind of conspiracy type things. BlackRock's not going to have any incentive of buying below the market or buying above the market as it relates to the ETF business. Is that fair comment?
Absolutely. So for BlackRock's part, okay, always go back to the old adage: follow the money. Okay,
Yeah.
let's follow the money. How do they make money? If you're going to go down the conspiracy rabbit hole, tell me how BlackRock makes money, and I'll answer the question. The BlackRock makes money because they take fees, okay, and they take fees of a lot of different vehicles. They offer tons of different ETFs, okay. The iShares entity issues a lot of different ETFs, but at its core, they make money based on a fixed percentage. There's a fee percentage they get of the underlying assets that they hold. So if this trust, it's called IBTC, that they're going to launch, the ETF is a ticker symbol IBTC. they, along with all the other ETF providers, have an incentive to take a hefty fee from that ETF structure. And keep in mind, in the traditional world, I don't know if you have a lot of stock exposure or any stock exposure, but there's been a race to the bottom with respect to a lot of the ETFs. Like some of the ETFs will charge you like 4 or 5 basis points a year for holding the ETF, which is nothing, right? The reason why I think a lot of them like the Bitcoin ETF structures, they can charge a lot more than that because there is some logistical issues with holding the Bitcoin. So that helps their bottom line, right? They have an incentive not only to get Bitcoin up, but to get their customers to have exposure to this asset because it's a new product to sell.
Why would they want the price up?
Well, okay, so if you
obvious question, so
no, it's great. So just do the math here, okay? Let's just use some basic numbers. So let's say the GBTC right now is $20 billion. Okay, I think that's the market cap of it, which is the Grayscale Trust. Okay, so of the GBTC, they are taking a 2% fee. Okay, roughly 2% fee. Out of 22, I'm just checking right now, it's $22.4 billion. So I don't need to do the math for you, but what's 2% of $22.47 billion on an annual basis? That's a cash cow. Yeah. That is absolutely, attractive. So now imagine if they're 2%, which is fixed, it's in the filing documents, they get to do it depending on whether it's 22 billion or 10 billion. Imagine if that goes to 50 billion. If that becomes a 50 billion, 2% of 50 billion is a lot more money. So they have an incentive to get it to go much higher. That's the key point.
The way I like to describe it is, hey, if Bitcoin's at $20,000 and the fee is 2%, they're going to make $400. And if it's $200,000, they're going to make more. And so
and just go back to what you said about your sister. And this is one thing that I think some people are missing right here. Okay. What is the common thing you hear about, especially in the last year since FTX? What is the common thread you've heard about for years about Bitcoin, right? A lot of people, a lot of mainstream investors are scared about being hacked. They're scared about dealing with some of these exchanges they're not familiar with. That whole dynamic changes when they have it at Fidelity, at Schwab, at major institutions. You could buy it, right? You talked about your sister. She probably doesn't want to set up a Coinbase account or do cold storage or do all these things. She wants to have access to the price appreciation of a finite asset, the first truly finite asset in probably human history, only 21 million. And she wants to do it with an institution she's familiar with. She doesn't want to take the time to transfer it or have to manage it or set up two-factor authentication and worry about whether the exchange is going to rug pull and steal all their money like FTX did. You got to remember, everything in Fidelity, everything in your mainstream brokerage accounts, it is protected by a special type of insurance. So are you familiar with that? Do I need to explain that?
I think that'd be good for the audience. Go ahead.
Yeah. So you can look up SBIC insurance. Okay. SBIC insurance is different from FDIC. It's very similar, but basically it protects, it's got a protection limit of about $500,000 that it provides where you are holding securities with a broker dealer. Okay. And the idea behind it is that, we're going to trust these broker dealers to safeguard their funds. If something happens, you're not going to lose your retirement savings. And you'll note it's about double the protection of FDIC for just cash in a bank account. So it covers any stocks, bonds, treasury securities, anything, mutual funds that are held in a registered brokerage house. So it would apply to the ETF structure like IBTC. So if you've got $500,000 in an account of IBTC, that has insurance, right? Now contrast that, Gary, if you got $500,000 in Bitcoin. If your sister puts $500,000 in Bitcoin, at Coinbase, I can tell you there's a lot of risk there of it getting stolen and getting hacked, and Coinbase is going to say that's your own problem. We're not covering the insurance of that. So that's a big deal, right, for people if they want that insurance that's provided by the government.
Yeah, that's a big deal, and I think and people want somebody to sue also, right? They at least want to be able to file a claim. You can't. There's no CEO. Like I bet you about the marketing department at Bitcoin took me 2 or 3 years to figure out shit. There's no marketing department. That's why it's so bad. People are getting all personal instead of somebody could have just told me, hey, this is part of decentralization, man. It comes with some gross inefficiencies, right? There's no common message. And that's what some of these other altcoins are able to do because they do have a marketing department. No one's willing to look at Bitcoin in its, hey, there are some negatives of decentralization. And marketing and common messaging is one of them, right? It's because the marketing, for me, I missed Bitcoin in 2016 because the carnival, man, the noise was so heavy. I was like, fuck this, man.
Yeah.
I worked my whole life for this. I'm not going to just throw my money at a lottery ticket.
When you first were getting on the internet, did you get like a service? I remember I used America Online. Did you ever use America Online?
Oh yeah, AOL, man.
AOL, right? So one of the things about AOL that I think made it catch fire with the internet in the early days is because it had this sort of walled garden. If you used to sign on to AOL back in the day when they were giving away the discs, the free 100 hours or whatever it was, they had, forums and AOL chat, and it was sort of, you were on the internet, right? But you were in AOL system. Okay. They had all these different message boards and things, proprietary to AOL. And we sort of moved away from that, but it was more user-friendly for people getting accustomed to it because you went into their sort of walled garden with their features. Now everybody has their own broadband internet and they can go to all the different websites they want. But I think there's an analogy there for Bitcoin because I think Bitcoin is so decentralized. It's so, difficult for some folks to get wrap their heads around that they sometimes prefer things that are a little bit more user-friendly, that they can just click and, own paper Bitcoin or do that sort of thing. And, that it's a process. I believe, within 10 years, a lot of people will be natively holding Bitcoin. I think that's the trend, but it's not going to happen overnight. And there's some people that'll never do it. But I don't know if you saw Jack Dorsey's new wallet. It's pretty slick. Very, very cool hardware wallet that he's pioneered. You need things like that to come out to make it a little bit more user-friendly if people are going to self-custody, I think.
Yeah, for sure. Look, the technology, we won't even notice the wallets in 2 years, right? They're so different, just like our telephones are different than they were 20, 30 years ago. Joe, most people come here because of price. Like right. I believe everyone's here. If this was a $12 price, I hear the whole philosophical, we're free money, and free liberty and all that stuff. That's awesome. However, I think people usually and mostly come here and stay here for price appreciation. What do you think, as we have the luxury to be able to sit on the front line, the front seats of a major league game that's getting ready to be launched here, to bring in all the family offices? I spend time with family offices. I think very few people are deployed here yet. Do you agree with that? That there's
I think exposure is still very light among a lot of those places.
Yeah. I think it's I think 80-90% of them are on zero, man.
Yeah. And I think not only that they're on zero, there is a certain segment that are more active, right? What they tend to do, they still see it as like, we're going to ride momentum. So they'll come and they'll enter the space when there's a bull market, they'll ride the momentum, and then they'll bail on their positions. I think that starts to change. I think you have less tourists, so to speak, and more people that are willing to stay on Bitcoin Island, for a longer period than that and put significant amounts of wealth in.
Yeah, they're coming in for 5 years
or more.
It's
more.
It's interesting because they have a lot of 10-year products. Most of their real estate, like, this is a really interesting. I think they can come in for 5 years and then review it, but they're not coming in to day trade this stuff, right?
No.
There will be some day traders. And my prediction is they're going to get they're going to obliterate this old school, these little traders that have been popping around. The new guys coming to town are really going to move. Do you think there's going to be more volatility or less volatility as the ETF goes up?
I think there's going to be way more volatility coming. And the biggest reason for the increase in volatility is, in my view, I think it's going to be driven by macroeconomic concerns. Okay. Because you got a world awash in debt. We all talk about this all the time. And I'm not a doomer and gloomer saying the world's going to, implode in the next few years. I don't believe in that. What I do believe is that the central planners are going to do what's necessary to keep the ship running, to keep things humming along, whatever it takes. And Bitcoin is the perfect sponge, really, to absorb the liquidity that's provided by them, the spending, the debt, whatever they need to do, go do it. Okay. Because Bitcoin's, has a finite amount, and it's going to absorb it in better proportion to anything else that's out there. And this is the big difference between, really Bitcoin and everything else, that, stocks, equities, bonds, they're always issuing more of it. I mean, I think the closest example, and you brought it up, is real estate, right? They can always build more, but there's only so much land out there, and there's only so much choice land in prime real estate. And while they can expand it to some degree, Bitcoin, no matter what demand is, supply is really constant. Yes, there's some new Bitcoin mined every day, but the amount's going down. And to me, that there's not been anything like that in human history. They're always finding more gold, they're always finding more oil, they're always finding all more of these assets. The finite nature of Bitcoin is truly remarkable. And to me, once people realize that, it becomes really hard to sell. How do you sell Bitcoin, when it goes up 2 or 3x? And by the way, one thing just to think about, Gary, is that you said earlier, and it's really important for people to think about, in the early days, when Bitcoin was a few pennies, it was a science project. Putting serious amounts of money in it would arguably be pretty dangerous, right? The higher the price goes, it's almost the opposite. You get to $1 million Bitcoin. Why the heck are you selling it? You think it's going away at $1 million? No, at that point, you've got so many Bitcoiners that are going to donate to political candidates to protect it and prevent it from being outlawed. You got so many people that are influential in society, that are billionaires, that are going to work to, make sure it has a favorable regulatory environment. It's as it develops and a number goes up, as you pointed out, it almost becomes better from a risk-adjusted reward standpoint.
Look, I got buddies, but they bought this at $7. They didn't buy $10 million worth. Okay, they were terrified to buy 10 mil. They'll buy 10 million right now at 44,000. They're like,
without a doubt,
it's a better trade than it was. Like, it was a throw a dart, right? It was, who knows if this is going to work or not.
It goes with liquidity, right? If you bought $10 million in Bitcoin at a few dollars and you tried to actually exit that position, you can crash the market. Right. That's what people don't understand. When a market's really small, you may, on paper, like even Saylor right now, we talked about Saylor, right? Saylor's true believer. He's acquiring Bitcoin at any price. If Saylor went and tried to liquidate all of his Bitcoin right now, it's going to cause a lot of volatility in the price. I think it's not going to be fatal. I think people are going to pick up those coins at a very steep discount, but there's a difference between paper assets and being able to liquidate it. And the key thing I think for him is, when Bitcoin is $400,000, $500,000, he'll actually be able to liquidate some of his position and capture some, fiat gains. But for my purposes right here, like, if you're a younger person, you should be thinking, I mean, even 10, 20 years is I think a short time frame for this asset.
Yeah, I agree. And then, your analogy on the paper with Saylor, he would have the exact same problem that Elon has with Tesla stock.
Yes.
We compare and conflate these two conversations. We're like, there's no difference.
Right.
There is absolutely no difference.
It's common in any field. If you own a ton of real estate and you need instant liquidity for all the real estate, you can sell some. But if you were to sell a massive portfolio of real estate, you're going to have to give it a fire sale, right?
That's right.
That's
the secondary issue, right? So you have a secondary market, and Michael wants to sell 1 billion shares. He'll probably make a private phone call, whether it's BTC or MSTR.
Right. And I don't see that as a problem at all. I know people talk about, what if this happens or Saylor happens? I mean, ultimately these things get handled and there's liquidity in the market. I know clients who have easily executed 8, 9-figure trades of Bitcoin without even disturbing the market. It was like a blip, and that's key. That's key, So I don't know. I couldn't be more excited about the asset, because I think people get this all wrong. They think the higher the price goes, well, I missed it. Okay. And it's the opposite. The higher the price goes, the better risk adjusted return you have. Okay. That's it. It's that simple.
Yeah. I think it actually secures the industry. It doesn't make it more exposing. It actually secures the industry. Joe, I know we're tight on time. Where do people look? This guy's a real lawyer. Okay. He's really studying the space. I think people that are looking at Bitcoin and thinking it's going to go to $500,000 one day are not prepared with professionals around them. I'd encourage you to follow Joe. Joe, tell everybody where they can follow you, what law firm you work at. Just do a little blurb on
Yeah,
yourself.
absolutely.
I think people need more professional help here, or may in the future.
Absolutely. So I'm a commercial litigator. My primary specialty is litigated disputes. So people that are suing or being sued. I don't do any criminal law, but I work at a law firm of Amundsen Davis, based out of Chicago, and I am the co-chair of our cryptocurrency, fintech, and blockchain practice group. So if you Google my name, Joe Carlasare, you'll find me very quickly. It has my contact information. If you're involved in any litigated dispute, happy to help talk with you about it and figure out the best way to and best solutions for you. In addition, as a litigator, I sort of always look to, as I said earlier, sort of a risk assessment of different folks. You know, if you're involved in certain businesses and you want to say, how do you keep me out of trouble? Which, an ounce of prevention is worth a pound of the cure, right? So I try to prevent people from getting into tricky situations. I do that all the time, and I also work on regulatory issues related to Bitcoin and cryptocurrency. So any or all of that you need help with, just Google my name. I'm also on Twitter. I'm pretty active there. You can go to @Joe Carlasare to follow me. And like I said, if there's anything related to Bitcoin you want help with, if I can't do it, I know some of the best minds in the industry who can help you. So I'm always happy to talk, and feel free to reach out.
Yeah, guys, Joe is really, really well connected, and he doesn't. If something comes out of his mouth, it's actually well thought through, studied. Joe, last point. Price this time next year?
Ooh, I'm pretty bullish. I think we're going to hit six figures by the next year. I'm not going to give you the exact one, but I think six figures it's a wide range there, but we're going higher, and that's all that matters to me. I just to let you know, if you're looking at the price charts on a daily basis, it's fun, it's exciting, it brings in people, but at the end of the day, a lot of it's a random walk. Somebody asked me yesterday, why did Bitcoin crash 10%, Joe? Why did it do that? I'm saying it's a small asset, right? It's so young. If you want to get Bitcoin when it's $1 million, when it's more stable, go for it, man. That's your choice. You'll be buying it levels, 10x higher than here. But if you want to, gain in that real steep adoption curve, which we're going to hit, the time is now. It's not to wait. It's not to time it. If just one final thing before I go, because I got to jump for a court appearance, but a lot of people are trying to time this market right now. They're trying to say, how do I wait for a dip? How do I do that? My not financial advice, but what I would tell friends and family is that you can't. You're never going to time this market. I've been involved in it for 6 years now. What the best way to do it is to average into position. If you want to acquire it, buy it in chunks on a regular basis, because it's the best. You're going to be sitting on the sidelines and you're going to be kicking yourself when it's $60 or $70 or $80,000.
Totally. That's a great way to end. You're going to go knock it dead in court, I'm sure. Joe,
Yep.
It's been a pleasure meeting you. I love working with you. The next time we do this, we'll do this more on seeding and the ETF and get deep into it. Thank you very much. Okay?
Let's do it. Thanks, Gary. Take
Ciao.
care.